Good morning and welcome to the World First Morning Update. Well, over the last week we've seen the pound recover. This usually isn't a currency that we touch on in the weekly reports. However, over the last week we've seen some strong data out of the UK and the pound has rallied as a result. Generally speaking, the comments from the officials in the UK are rather dovish. This is to avoid having a premature appreciation in the pound, and it's quite an effective strategy to support their export markets. Over the last week, however, the economic data had a different opinion. The consumer confidence figure came out at 53, and this was a marked improvement from the previous figure of 45. This highlights how the UK economy should be bouncing back this week, and indeed this could be a year of the pound. In the US overnight, we had some mixed data, and as a result, the equity markets have fallen. The S&P 500 came down over 1%, and as a result, the Aussie came off to below parity. This was off the back of the economic data out overnight, which was mixed. We had housing starts and building permits. Building permits were up, however, housing starts were down, and as a result, we've seen the Aussie teeter around the parity level. Going forward, it'll be interesting to see where the Aussie dollar goes in the next 3 months. We've seen equity markets rally over the last month in the US, up around their 2008 August levels. To date, since the GFC, we've seen the Aussie go tit for tat with the S&P 500, and it'll be interesting to see if it follows the S&P 500 up for the rest of the year. The downside risk to this is obviously the economic data out of China, which we have today, and the Queensland floods. We've got a host of data coming out of China today. We've got the CPI, GDP, industrial production, PPI and retail sales. These figures will have a lot of risk attached to the Aussie dollar, and we expect those figures out at about 1 p.m. With regards to Europe, we've had the Eurozone grabbing headlines again over the last week. We had Portugal refinancing their debt, and just prior to the bond auction, their finance minister noted that if they had bond yields at 7% or more, we'd see Portugal going for a Greek-style bailout. The bond auction came in at about 6.8% or thereabouts, and as a result, we saw some support for the Eurozone and support for the euro. Watch out for that data coming out at 1. If you'd like an update on the market or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your week.